We're basically the Shopify, Amazon, Deliveroo for real estate on an app. And I think there's a bigger drag on the family when you're not happy in your job than if you're making less money.
Have you ever wanted to build a unicorn? The billion-dollar business that we see a few people out there have. A long way away from reality, isn't it? But our next guest is somebody that's working towards that right now, and he's not far away.
Why am I doing it for others? I can do it on my own. So when you just wake up hating your life, going to the office, that's the time when you're like, okay, I need to change.
I can't wait to share his story with you. You're going to learn about mistakes you should never make when becoming an entrepreneur. Decisions you should always take when becoming an entrepreneur. The highs, the lows, the pitfalls, the wins, success, pride, what matters, what doesn't, and how you can go on and build a company like that yourself. So without further ado, let's get started to the awesome Rami Tabbara from Stake. Hi everyone, and welcome to this episode of the podcast. Before I start, have you subscribed yet? If you haven't, it would mean the world to me if you could. The more subscribers I get, very simply leads into the better and better guests that I can get for you, my audience. So please, if you haven't subscribed yet, please take the time to do so. Right, on with the show. Let's get started to the awesome Rami Tabbara from Stake. This episode is proudly sponsored by Allsopp Allsopp, Dubai's leading and largest real estate brokerage. Now, with over 16 years in business, Allsopp Allsopp have transformed the real estate experience for thousands of buyers, sellers, landlords, and tenants. By leveraging cutting-edge technology and data-driven insights, they are the consistent driving force behind the growth of Dubai's real estate sector. Their unmatched expertise and industry knowledge empower clients to navigate the market with confidence, no matter what their needs. Committed to finding your perfect home, they, without exception, ensure your real estate experience is as seamless as the property itself. Whatever your property needs, keep moving with Allsopp Allsopp, the trusted choice in Dubai real estate. Rami, thanks for coming to join us today.
Thanks for having me, Spencer.
Getting you on the show. I mean, you were supposed to be on the show a long time ago and you never came on. Maybe I had bad feelings. I wanted you to be a sponsor and you
I'll tell you what, I've ran with you, I've worked out with you, finally, we've done yoga together, finally I'm on the show now. That's what it's taken. Yoga is what's got me on the show. Hot yoga together.
Like the secrets. Or maybe we'll have to go on a date to seal some deals. Well, look, thank you so much for coming to join me today. Obviously, you and I have known each other for a long time, and I've watched this journey that you've been on, and I'd love my audience to learn more about you, more about the business, what you've achieved over time, and really go into giving people a great understanding of the challenges that any business owner and startup faces, but even more so that might exist in the tech space when you're looking to raise lots of money. So first of all, tell everybody about Stake, what the business is, what it does, how it works, okay, and how people can benefit from it, and then we'll dive in.
Cool. A very simple elevator pitch. Stake is a digital real estate investment platform. It's basically an app that allows anyone from anywhere in the world to invest in real estate in Dubai and now Saudi Arabia in under 3 minutes, starting from 500 dirhams or 500 riyals. So it's fractional ownership of real estate. You download the app, you choose which property you want to invest in, create an account, go through KYC, and boom, you own a piece of property and you start earning income from that property equivalent to how much you've invested. We're based in Dubai and in Saudi Arabia, regulated by this DFSA in Dubai and the CMA, the Capital Markets Authority in Saudi Arabia. So fully regulated, fully transparent, fully credible. And we're basically the Shopify, Amazon, Deliveroo for real estate on an app.
Okay, so let's dive into that a bit. The type of person that would become a client for Stake would be someone that maybe couldn't afford to buy their own property.
It's a combination of everyone. We have people who are Emirates Airlines hostesses that are putting 500 dirhams every month. We have taxi drivers who've invested on Stake, and we have people who have invested over 5 million dirhams on the platform. So literally we cater to people who just want exposure to real estate, but want to do it in a digital, transparent, regulated way, and an ability to diversify. Because if you have $100,000, rather than investing in a down payment into one property, we allow you to diversify that across different properties in different areas. So really, it appeals to anyone, people who just want exposure to real estate.
So instead of being kind of like lumbered with one property and all of the risk that goes with that of renting it out, finding a tenant, selling it, dealing with maintenance, yada, 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 all those things any property owner would know, you remove all of that from them.
All of that hassle-free. So imagine today when you have some money and you put it into a property, it's all that capital risk that you're putting. The property getting vacant, a storm might happen, like, last year get damaged, or you buy something off-plan that never gets completed. With Stake, you're buying ready properties. So we don't focus on off-plan. We do income-generating properties. So you can immediately see a 3D tour. You can see all the photos of the property. And then we take away all the hassle for you. So people who invest in real estate, there's a huge affinity to real estate in our part of the world. You know this. You're taught from when you're young, if you make some money, put it into real estate. So there's a huge affinity to it. But people, until Stake was launched, how would you invest in property? Either you buy an off-plan property and then you have to pay payments across 4 years, or you buy a ready property and go to bed every night knowing that you owe a bank money unless you have the cash ready. But for me and for everyone at Stake, our mission was always say, like, why would you put all that money into one property? Diversify. Put, if you have $100,000, put some money into real estate and then put into other asset classes, but do that in a way that's regulated on an app and it's hassle-free. We take care of all the headache and we distribute income at the end of every month straight into your wallet on the app.
So I've got my money invested. I'm making an income every month. My money can be spread through lots of different properties. And I also have liquidity.
Yeah. So what we did, which, we really pushed the envelope on this from a tech perspective, we built something called the exit windows, which basically allows people to sell their stakes on the platform every 6 months after the first year of investing. And the reason why we do it after the first year is we don't want people to come buy and sell and flip, because real estate is a long-term investment. So, you're paying fees, you have all those fees, whether it's the land department or the broker fees. Those fees, by the time if you sell after a year, it's most likely not going to be at a gain. You have to wait for real estate to appreciate. So after the first year, people can sell their stakes on our platform to other investors through the exit windows every 6 months.
Okay, so I've basically got liquidity every 6 months. All right. So if I really need to get out, I've only got 180 days to wait.
Exactly.
Okay. So that's not complete liquidity, but at the end of the day, if I was trying to sell a property I owned, I've got no idea how long that would take.
100%. And I'll say one thing, our secondary market, our exit windows, for every buyer, there was 4 sellers. For every seller, sorry, we need to repeat that. For every, yes, we need to edit.
Yeah, I just did.
Yeah.
Okay.
Our secondary market is actually very liquid. So for every seller, there were 4 buyers. So imagine, you said something, you've put the right price and it immediately sells.
Amazing. Okay, so that's the business. What year did it start?
So quick background on myself. I've been in Dubai now for 20 years. All I've done is real estate. Started with some of the top developers. And then, I got bored and wanted to launch something in the real estate space. And, people who've been in real estate for so long, either continue with developers or they end up becoming a developer themselves, or they set up a brokerage like, the thousands of brokers that exist in the market. I've always been, amused by what technology does to make our lives easier. Just starting to look, okay, how does real estate and technology come together? But then, when you've been in real estate for so long, you tend to realize that there's a lot of inefficiencies. Okay, there's a lot of discrepancies. There's misalignment. Sometimes people want to sell at the highest price, not thinking of what the retail investor is actually buying. You buy something that's off plan and gets delayed. And then affordability. People have an affordability issue with real estate. It's one of the most expensive asset classes to get into. So I started speaking to one of my closest friends I've known for 25 years, went to the same high school. He comes from a finance background. And we started talking about, okay, listen, you come from X-Finance. He was in Deutsche Bank. His name is Manar. We've been best friends since we were 15. And I come from a real estate background. How can we create a platform that enables transparency, fractional investment, digital? We started speaking to the regulator. This was in 2020 when we were both still employed. It was in 2019. We were both still employed. And then we started speaking to the regulator and then a lawyer to start getting our license. And then in 2020, we had agreed that once we get the license from the regulator, we would both resign from our jobs. But in early 2020, I saw that the application was submitted, but one of us needed to be full-time on this to actually launch the business. And then, in March 2020, middle of COVID, I left my job. And then we started building Stake, found the tech team. And then officially January 2021 is when the doors opened and we started taking some money on the platform.
Okay, so let's talk about the results so far then. So March 2021.
January 2021 is when it went live.
Okay, January 2021, it went live. So we're sitting here in January 2025. Okay, so we're literally 4 years down the road. Okay, how many people have been on the app?
So our app has been downloaded 1 million times. 1 million downloads.
1 million, and then how many investors or paying customers, whatever clients, do you have?
So from the 1 million downloads, we've had 910,000 registered users, of which over 35,000 people have given us money from 206 nationalities from 172 different countries.
Okay, slowly. 35,000
Paying customers.
from 100 and what?
From from which countries?
Yeah.
From 172 nationalities, 206 countries.
Wow, which is nearly the whole world.
Exactly. That's
Wow.
the beauty of Dubai.
Okay, so that's enormously successful then. How many properties have been purchased with that money?
400. We've transacted now just under 700 million dirhams across 400 different properties.
So for people that don't understand dirhams, that's $200,000 roughly.
200 million.
$200 million, it's my mistake. And on 400 properties. And a property typically is a 1 or a 2-bed apartment, or is it a villa?
Between studio all the way up to villas. We just launched a new channel called Fix and Flip. So we've identified that there's a lot of opportunity in the market today where you can buy something run down, upgrade it, and sell it for a premium, where the sell period is 24 months. So that's something that's villas, and now we're taking on stuff that's 25 million dirhams on the platform.
And how much capital have you raised as a business from outside investors?
Just under $28 million now, between seed, pre-Series A and Series A from some of the top names in the market.
And who are some of those names? So
Mubadala, which is the sovereign wealth fund of Abu Dhabi. We've raised from Wa'ad Ventures, which is the VC arm of Aramco in Saudi Arabia. We've raised from MEVP, which is one of the largest Middle East venture partners, one of the largest VCs in town. And then we got some money from Republic in the United States, one of the largest investment platforms. So yeah, we've been able to raise some quality, grade A names.
So you're just a Midas touch, happy days, easy peasy, start a business, build it, get it going, get loads of investors and absolutely smash it.
You said you've known me for a while. Haven't I gotten grayer?
You have, yeah.
I lost more hair, no? It's never been a straight line. It's definitely the hardest thing I've ever personally had to do since, getting into working and employment since, I was 20.
What's the company worth today approximately, do you think?
Well, it's not about I think, it's what we raise money on, which valuation. So I can comfortably say north of 100 million.
North of 100 million. So you've raised 28 million at a valuation of north of 100 million. Okay, obviously that money was raised at different points. Okay, let's talk for the people here that would love to be an entrepreneur, the people that have struggled, the people that have got ideas but don't take it any further. Take me on the journey of becoming an entrepreneur. So you've told me about your relationship with your school friend Manar. You've come up with an idea. Had you ever started a business before?
I have not. I used to invest in properties or businesses and stuff as a VC, angel investor.
Yeah, friends and family.
Yeah, friends and family rounds and stuff, but never started my own business.
So, and Manar, same?
Same.
Both
corporate.
Two guys from the corporate world, okay, one in real estate, one in banking, and you've started a company for the first time.
Mm-hmm.
Okay. Who is the most risk adverse out of both of you?
Manar. So we're actually 3 co-founders. I'd like to add that. My third co-founder is our CTO, who, we can talk about that. We were talking about that earlier. He was a blessing in disguise when we found him. And yeah, so he's come from startup world. So I would say who's the most risk adverse person is Manar, because he comes from banking and, he's very careful about what we do.
So let's break all this down. And the personalities, do you complement each other? You're very different?
Very different. The 3 of us are super different.
Tell me how you're all different.
So I'm the, let's go without thinking, 120 miles an hour, no risks. It's okay. Fired up, social. I'm all about excitement. And, if I feel it in my gut, I do it. So I tend to look less at data, but more about what I feel in my gut. Manar is a lot more calculative. Ricardo is a bit of both. And I think the beauty of it is, because Manar basically runs everything that has to do with finance, compliance, because we're regulated. So compliance is a big part of our business.
Mm-hmm.
Legal, everything, he runs that. And then Ricardo runs all the tech and product, and I run everything that has to do with sales, real estate, and marketing. So that mindset is very different, but we complement each other because when we come to a table, everyone has their own kind of point of view and it all kind of comes to push the company forward. Because I think people need to understand when you're building a tech business, especially when it's regulated, you have so many moving parts, a lot more than you can ever imagine. So
what do people get wrong about entrepreneurship? What is it that they misunderstand?
They think if you have a good idea, it's going to work. They think it's easy to find the right team. I think one of the most important things that we've done is really find the best team out there. Hiring and talent, finding the right talent has been the hardest thing. People think that's easy. And people think that just because you have a good idea or you have a good resume, people are going to give you money. I mean, I'll tell you, talking about how hard it is being an entrepreneur, especially when you're raising money. There were times when we didn't have any money, and we couldn't raise money. We can get into that. But, I think people tend to really belittle how important that is. And then getting outside your comfort zone, you're building a company, you're building a brand. People tend to forget that.
When you first started the business, how much did you think you needed to raise?
So when we first started, we wanted to raise $4 million. That was our aim. Let's go raise $4 million.
Big goal, yeah.
Yeah, that was our goal. Our business plan said that we would not be successful unless we raised $4 million. We quickly found out that no one was going to give us money. No one was going to give us $4 million at that time. People were like, yeah, I think at the time, if I count them, we got maybe 30 or 40 no's from people who were like, no, go prove it, launch the business. So we had to go friends and family. Every business starts with friends and family, calling people, calling the rich friend that you haven't spoken to, the rich cousin, the rich uncle, be like, hey, this is our business. You trust me, you know that we can deliver. How much can you give me? And then we started raising, I think we raised $1 million just to basically.
Who was the first person to give you money?
Family, friends.
Who was it?
I'll tell you, the first person that gave us a check was my wife's second cousin. Weirdly enough, he's a Saudi guy, Saudi individual, who basically has very successful businesses, and he's like, yeah, fine, I'll write you a check. But he was the first person that transferred the money. And I remember we're like, oh wow, okay, the money's in. Look at it, now we're on the hook for this, and I see him every summer now, so I can't. There's no way I can screw him over. He's given us the money. So
and how much did he give you?
$75,000.
And when that hit the account, how did that feel though? Was that?
Yeah, we were like, oh, amazing. But keep in mind, by the way, I'll say something also on an entrepreneur. Manad and I put our own money on the line. So we both seeded the business as well with the $75,000 with the first round.
So you seeded your life savings?
Yeah, we both put in close to $500,000. So life savings from corporate. So other than the outside $1 million that we had raised, we put in, because you have to, when you're a regulated business, you have to put in money.
Yeah.
So we seeded that money each, and it was a tough time when there was COVID. People were at home, no one knew what was going on. We committed to putting $500,000 each.
You start a company after being in corporate. In corporate, you get a nice salary, a nice bonus, sometimes flights, company cars, accommodation, stuff like that, all this kind of like sexy stuff that goes with being in corporate.
Yeah.
And you kind of live a life that being a corporate guy would live. So what kind of things did you have nice cars and watches and all that stuff?
Yeah, it's really interesting because when you're in corporate and, you're making good money, whether it's banking, real estate, banking, you get bonuses at the end of the year, real estate, you get commissions, the market was doing very well. You get accustomed to the life of, I can afford nice things because I know that money's going to be coming in, right? So you buy nice watches, you travel business class, you buy nice cars, and you get your family kind of accustomed to that. You quickly realize when you start your own business, that's not the case. First of all, we weren't taking a salary for the first six to 8 months. We didn't take any salaries until we actually were able to raise enough money. So you're living off life savings in addition to what you've invested. And I think one of the most difficult things that an entrepreneur needs to realize is, especially when you're coming from corporate, is when you don't have that money, you need to find that happiness. Because for a lot of people, buying these nice things makes you happy. And it did for me in my corporate life, who doesn't get happy from driving a nice car or being able to travel business class to like the best places? That's what made you happy as an employee at a company. But when you start become an entrepreneur and you don't have those nice, or you can't afford those nice things, what gives you happiness? And it's basically seeing your business grow. And if you can change that perception, I think that is alone part of half the struggle, where you are focused on building a business and you're no longer just focused on, okay, I want to build a business that I'm going to exit, or I want to build a business that I'm going to sell immediately because I want to buy nice things. No, I want to build value in this business. And I think over time, where we as co-founders change is, our whole lifestyle changed. You have to really live within your means, because no one's going to give you money as an investor telling them, hey, I want a $1 million salary. They're going to be like, your business is still growing. How are you taking $1 million out as a salary? So that perception change is super important.
So just talk to me about how that impacts families, because we've all got wives and kids, and they all come at a cost. And when you're in corporate, all their needs and desires can be serviced rather easily. So what goes on at home? What kind of challenges do you face at home, and how was your wife challenging but also supportive for you through that process?
So I think it takes first of all, it's like a reality check, for the family, because they get used to. I mean, listen, I have young kids, so it didn't really make a difference to them as long as they're going to school and they can do their activities. But I think just as a family, it's a reality check. At the beginning, it takes time to say, hey, we're living in that kind of way, but now we need to kind of tighten the belt. We're building a business. This is a long-term investment. There's a value in this business. Eventually, you'll see the light at the end of the tunnel. And I think specifically for my wife, at the beginning, it was like, okay, but are you sure you want to do this? Are you sure you want to take this risk? Because you're maybe, I was unhappy in corporate, which is why I started my own business, but at least you're comfortable, you're in a happy, you're making money. And I think, are you sure you don't regret it? And that reality, those serious conversations with your partner are super important. I think I had those with my wife, and I said, if she knew that I wasn't fulfilled in corporate, and I think there's a bigger drag on the family when you're not happy in your job than if you're making less money, if you see what I mean. Like,
so you're broke, but you're having fun, or you're in corporate and you're miserable.
Yeah, well, exactly. I mean,
as an extreme.
Yeah, well, I mean, I wouldn't say broke, because at the end of the day, like, you're making a lot less than you were. And I think, for me, it's, if you're fulfilled and you wake up in the morning and you're so excited about what you're building, you're naturally going to be a better father, a better husband. If you go to work and hating your life, and I was, you're going to come back home grumpy, you're going to wake up grumpy, you're going to be a bad father and a bad husband. So when you start launching your own business and you're so happy about it and excited about it, that naturally is that energy passes around in your family. And I think that takes over kind of the more material things. And I think, I'm very fortunate to have a wife that wasn't into the material things as much. She was more about, healthy family and I believe in you, and really supportive. So that's really helped me, to really launch the business and be where we are today. I think when you close money from, when you do a funding round from big names, that gives you that stamp of approval. When, if someone like Mubadala and Aramco are believing in us, then, we're onto something.
Did you, when was it, you've been 4 years essentially. How long was it into the journey when your wife, that penny dropped with her, and she's like, okay, this is real? Because I imagine the first kind of couple of years, or the first year, is like, 75,000 from here, 200,000 from there. It's, raising a bit of cash, but it's not big league stuff, is it? Did she really believe in you from the start, if you were to ask her honestly? Or if I was to have a coffee with her and say, what do you think she would say?
I'll tell you, I think she really believed it when we closed our seed round of $4 million. When we hit that mark, she was like, first of all, she's like, okay, now, this is serious because you've taken money from people, like, you need to execute. And then, I saw her happiness, because she was, your wife is always going to be stressed out for you. So when she sees that, oh, you're not raising money, or the businesses are going well, or it's taking time, she naturally is going to get stressed out for you. But I remember literally in November, when we hit 500 million dirhams of transactions on the platform, and we had like this, dinner at the office, gathering for everyone. I remember I invited her and the kids to come, and I could just tell she's like, okay, this is going to be something. We'll eventually have the nice things in the future, right? And she's been I think after the seed round, and just seeing the business grow, and just seeing the amount of people. I mean, we started off as 2 people. Today we're close to 86 people. So, and just seeing that many people, she's like, I love what you guys have built. So, yeah.
That's lovely to see. And was Manar's wife the same?
Yeah. But, it's because, Manar and I, and both our wives were very close, obviously, all the time. So I think they both had those, discussions even behind our back. Yeah, just saying, these guys are crazy, or they're overworking, or, I don't know where they're going. But I think now both of them just really are our number one supporters. They're behind us all the time, and they really just want us to succeed. And most importantly, they're fantastic mothers, because I think when you're building this business, you really need that support system at home. And, I think I speak on Manar's behalf about his wife. They're just been phenomenal, mothers and really caretakers at home, and really helped us, launch the business and really just focus on execution.
Were there times in the early part of your journey where you thought it might not happen?
Oh, yeah. 100%, many times. I mean, if you don't have that doubt, people say, "Oh yeah, you wake up and you 100%, you can have no doubt. You're operating the business." There's always that doubt, that regret inside of you, and that's okay. Those you have to listen to them, and it kind of levels you. I mean, I'll give you the best example. This was literally a year ago. We were in the middle of raising our Series A. So we had obviously gotten a lot of no's and still trying to go through them and, until you get the yeses. But we had our lead investor in that round, which was MEVP, commit to $5 million. And out of our total raise, which was at the time just over 14. And we needed that money. It was October, 25, 26. And we needed that money before the end of the month. And we were waiting for the transfer. It was delayed. And I remember it was like 27th of October, 28th of October. Manad and I were looking at each other and we're like, how are we going to pay salaries this month? And literally we didn't have enough money to cover salaries for that month. So I remember calling him and I'm like, okay, listen, I still have some savings. Let's pay the people that we really need to pay now that, are on 10,000 or 5,000 or whatever, that we can just push to the other month or tell people, our senior people, hey, just cut us some slack and we'll come back to you in November when we have some money. And literally, I remember I had some money locked in HSBC savings. Like, how much will it cost me if I take out some money out? How much will it cost me to break that? And then literally, Spencer, I'll never forget this. At like 11:50 p.m. on the 30th of October, I get a text message from ENBD saying $5 million has been transferred. And honestly, to this day, Walid Mansour, who is the CEO of MEVP, I thank him so much because honestly, we couldn't sleep. I mean, I can go on and on about case stories like this, or when the regulator, you're waiting for the license and they don't give you the license, and just, it's never a straight line. And I think those things make you a lot stronger and a lot more careful with how you spend your money.
Talk to me about raising money. The journey of raising money, once, even arguably with the friends and family, what do you think is the ratio of pitches to deals that you have to do, and how do you pitch an angel, a friend and family versus how you pitch a VC or an incubator and something like that?
That's a great question. I would say the ratio is you get one yes for every 9 no's, so 10%.
Okay.
You really have to, and it's just it's crazy because you even for people think that it just because you have a great, you have some traction, it's easy to raise money. I mean, there's so many opportunities today for people to put money in. There's other asset classes. VC tends to be, tech startups tend to be risky. So why would I put money with them versus, other asset classes? So first of all, I want to highlight that it's not easy, and you really have to just keep pushing through it and believe in your business, believe in the team, because eventually you'll get more yeses, but you're going to have to go through a lot of no's. How is it different? Raising from friends and family is more about trust and knowing they know your character. They know that you're going to try your best. So they know that they're giving you money that they're okay to lose. But they know that you're going to give it 100%. So you're not going to take that money and, book first class flights around the world. You're actually going to try to build the business. And if you fail, they're not going to get mad at you because your character is strong and they trust you. It was a very different experience, going out, friends, cousins, father-in-laws, basically going and be like, hey, what can you give me? This is what I want to raise. And they just gave it to us on our merit, on our character, and for who we are, because they know us. When you raise from a VC, it's more like, how is this going to be $1 billion business? It's literally returns. Any investor is giving you money. For friends and family, it's less about returns, more about helping you out. With VCs, it's okay, what's my multiple? If I give you $1 million today, I need to go back to my fund. Is that going to give me a 5x or a 10x multiple on my money? And if it doesn't, then I'm not going to give you the money. So you really have to sell the bigger picture, sell the opportunity. But most importantly is you have to sell the team. Because people are giving, the idea is great, the tech's great, but you have to sell the team that you've built behind you. And I think that's one of the most important things. Really, one of the reasons why we've been very successful till today is because of the team we've built.
So when you do this pitching, I from what I understand about VCs and PEs to some degree, so VCs, for people that don't understand the terminology, is venture capitalists, private equity is PE. Is that they try and get their pound of flesh out of you. They try and squeeze you as much as they can. And a lot of people come out of those experiences going, it was unfair.
Yeah.
They were doing.
Yeah.
Is that your experience?
To be honest with you, no. we had great relationships with everyone who was giving us money. Obviously, they want the best deal.
Before they gave you money, you've got to build a relationship and pitch them.
Yeah, I mean, you obviously have to go through many meetings and many presentations and explain to them why this is going to be $1 billion business, and why you feel you can scale this to other markets, and why your tech is one of the best techs out there. Because effectively in a tech business, if you don't have good tech, the underlying tech needs to be good. So if you don't have good technology, no one's going to give you money there. So you really have to go through those, motions and explain to them, and it's really strenuous. I mean, I'll tell you, our Series A took close to a year to raise. That wasn't easy. A year of speaking, 1 year.
Okay, so this is important because people that look for investment don't necessarily understand that. You said 10% will convert. Well, you're now looking at what we're not probably sharing is how many meetings you have to have with each one of those to get that to happen. So
and how many follow-ups, because for some reason in this part of the world, people don't like saying no. I'd rather you tell me no immediately than, send me your deck and let's get on another call, and then you send me someone junior. I would rather you immediately from the first call tell me, hey, listen, no.
What's your heritage?
Lebanese originally.
Exactly. Lebanese don't like to say no either.
Some do.
As in my frustration for years, that just tell me no, I could deal with. I can cope with a no, 100%. It's like the maybe. I don't want a maybe.
No, the one thing, the term that I used to get is no, but we'll be watching from the sidelines, cheering you on, and please keep us in your emailers. Why? If you said no and you don't like the business, why will you? For number one, why are you cheering me? Saying you're going to cheer me on. Number two, why do you want to be in my future emailers? Just say no. I don't like the business. But because people tend to not like to say no, you have to keep following up and following up and following up. So I'll tell you, each person you speak to, you probably have to speak to 4 times to finally get the no. So
okay, so let's just break that down a little bit. So let's say Series A took 12 months.
Huh?
So you pitch a VC in January. Okay, you go in with your deck and your presentation, and you've got the stakeholders involved in that meeting there. Okay. How many more presentations do you have to do during the course of that period? Are you re-presenting? Are they asking you to make changes and present again?
So yeah, they're asking you to make changes to explain to them, why, show them the business plan, dig into the business plan, dig into your tech stack. They do due diligence on you. They speak to the regulators. I mean, it's a long process, especially because we're regulated. So people tend to worry because you have they get comfortable because you have a regulator, but they also worry about you having your ducks in order. So really, the amount of DD, I mean, I'll tell you, one VC who invested with us literally took them a month, and they wrote the check and they're like, good, we're in. But the most important thing when you're raising capital is find who the lead is. Once you have a lead investor, what I mean by lead is the person who's going to take the biggest chunk of the money you're raising. So we raised 5 million, 14 million. Our lead was Middle East Venture Partners with 5. So when they led the round, they dictate the terms and everyone kind of follows. In our case, even though they led the round, we still had names like Mubadala and Waad Ventures from Aramco, who also had an opinion on the terms. So we had to negotiate terms with 3 or 4 different parties. So that's what took 12 months. But people need to realize that when they're giving you money, it's not just about who you are, but they also have to look under, especially if it's an operating business, they look under the hood. Is what you're saying true? They look at your numbers. They look at your salaries. They look at, are you meeting the business plan targets? So it really is a long process. So it's not easy at all. And it's, you can't get fed up because, people are giving you their money.
So this reminds me of sales. Okay. At the end of the day, okay, you're selling your concept to raise capital. It's a different thing, but it's still selling. How do you open the door for a company like Mubadala? How does that work? Do you just, pull up in Abu Dhabi and knock on the door and say, hey guys, I've got something for you? Well, what is it you do?
So it's actually very interesting. We have a very good friend of ours who's actually one of our seed investors. His name is Kareem. So shout out to Kareem, who maybe was a second check in our company, by the way. He invested, I think, $75,000 or $50,000. I'm not sure. And he's in the finance world, and he's like, listen, by the way, I was speaking to someone who said they know you, who works in Mubadala, and his team wanted to, learn more about your business. And, I remember Malad and I looking at each other like, what would they want from us? Like, Mubadala, our business is still, we're not at the level of Mubadala yet. And I remember we had a call with them, and it just went so well. And they just understood the business, and they understood the potential of democratizing real estate. They understood how scalable this is. And literally from one call, I think from the first call to when we actually got closed the round. It maybe took 6 months when but it was, it's really, that was one of the, speaking to them and Aramco Ventures, that's what really enabled us to set our business differently to anyone else. Because when you get those big names behind you, it gives you that credibility. And the difference is with them is you're also pitching big picture, but they also want to know that you have your kitchen in order. And that's super important.
So basically, someone within your network made an introduction.
Yes.
So the value of your network is critical.
100%.
And so, I spoke to the guys that own Debizzle and Bayou, Hyder Ali Khan. And Hyder and his brothers told me that they went to 100 networking events and didn't know what to do, didn't know how to network, didn't know how to present. They went to all of these pitch fests and stuff like that. And they were like, we didn't know what we were doing. And their first investor came a couple of months after they did the last one of those events from someone who knew somebody that was at one of those events and saw them pitch. And that's where their first investor came from. And it was like, Spence, we didn't have a clue what we were doing, and these are guys that arguably were, one's MIT, one Oxford, one Cambridge, just like that educated guys that, don't come from money. So it's not like they come from wealth. You obviously know what I'm talking about. And I love the fact that it was just like, we didn't know what we were doing, but we were really relentlessly going at it. It was that we were going to find a way no matter what. And I believe that people underestimate the power of networking. Because a lot of the time, networking is prospecting. And to me, it's not. It's like, how can I build relationships with people where I can offer some form of value in some way? Maybe I meet you and you're a potential investor, but I can introduce you to someone that could be valuable for you. Then all of a sudden, I'm a valuable connection to you.
Yep.
And so then when I want to talk to you about how you might be able to be valuable to me, that's a much more natural way of building that relationship.
100%. And I think as a founder, as an entrepreneur, you have less time to do these networking events, but I'm very conscious of it. So, and Manar will say this, we were on a podcast maybe 2 weeks ago when he asked, who's the more sociable guy? He's like, listen, definitely Rami. He's the guy who's like, okay, we need to go to this event. And I still feel like I don't do enough of it, but I can't agree more. It's so important. We'd go to dinners in Saudi Arabia with, investors and VCs, just to keep our name out there. Because in this market, especially in this type of business, it really helps to have a strong network because people start talking about you a lot more. Especially if, you're a tech business, you're up and coming, you need people to talk about you in the ecosystem. And especially when you're not part of that ecosystem. When you come from corporate, this whole venture capital ecosystem was brand new for me. I knew, you tell me brokers, real estate developers, I know most of them. In a VC space, you really have to put your neck on the line and go out and speak to people and socialize and go to events and go to talks. It's super important. Fully agree.
And 30 days of Ramadan means 30 iftar buffets.
Yeah, exactly.
30 corporate iftar buffets coming up.
It's the iftar buffets and then the sahurs at night. So you're up till 4 a.m. But yeah, no, it's definitely important.
When you look back along the way, they say that hard work creates luck. But there must have been some moments along the way where you were like, holy macaroni, we landed on one there. Were Mubadala and Aramco the ones that really...
100%. I actually think it really, we've had many kind of amazing moments where like, okay, the stars are aligned for us. I think it was really MVP coming in as a lead investor. We're like, okay, great. When you have a lead, kind of things become a lot easier because every investor you speak to, everyone's a bit worried about who's going to put the first check. Right? Or why, if he hasn't done it, why am I going to do it? I don't want to be the fool around town saying, oh, I'm the guy who funded the company that no one wanted to fund. So when you get the lead, which was MEVP who really believed in us, that was like, okay, amazing. And then, yeah, the aha moments were like, okay, great. That's when we got Mubadala and WAD Ventures. And really, it's our Series A was really what set us apart. And, I was telling the guys this morning, we're now in the process of raising Series B. And it's going to be a lot bigger than our Series A. And I think one of the most important things I'm telling everyone in the company is this is when it's like go time. Up to Series A, the fundamentals are there and you've shown that you have a good business. When you're at Series B, it's like now you're playing with the big boys. And now I need to take this business like a rocket ship to the next level while keeping fundamentals because the market changed, Spencer. People before were all about growth. forget the bottom line. Today, no one will speak to you if you're not talking about profitability. And I think this is where the advantage of being in corporate before, especially with Manat on the finance side, is we always look at our bottom line. Like, okay, when are we breaking even? When do we hit profitability? And I'd like to say we actually hit profitability in Q4 last year, which is huge in the startup world. So for us, it's like, this is super important. You have to focus on the fundamentals of the business.
You're a super positive and pumped guy, and obviously you've had great success on this journey, but there must have been some moments that were dark and you kind of start to question yourself and maybe question each other. Did you ever fall out with Manat? Did you ever have arguments and bust-ups about direction? Did you ever sit there sometimes going, is this really going to happen? Or did you just have complete blind faith that it was going to happen?
No. I mean, yeah, do we argue? We argue almost every day until today.
I like Manat. He's a nice guy.
We argue because, there's always differences of opinions, and we're co-CEOs. So people ask us, how does a co-CEO work? And I think because we've known each other for so long, I've known him since he was 15. He's like family, he's actually, I consider him a brother. So we trust each other blindly, but we've divided the responsibilities in the business between where his strengths are and where my strengths are. So he covers my weaknesses and I cover his. And then Ricardo comes in and covers all our weaknesses because we're both not tech guys. There have been many dark moments. I mean, I'll tell you, there's a couple of times when, our tech was before Ricardo joined us, our tech was crap. And the app wasn't working or the platform wasn't working. And we're like, we didn't get any investments today. I remember when we launched in January 2021, we had a business plan that thought we were going to do $5 million in sales in our first quarter. We probably did less than $1 million. And I remember thinking to myself, like, is this going to work? Like, at what point do you throw in the towel? But there's a part of you that really needs to believe in yourself, where even if you can't be naive. When there's writing on the wall, there's writing on the wall. You need to, shift. But I think one thing that we did really well is when it was really dark, whether it was we couldn't get enough users, we couldn't raise money. It was all about, okay, let's talk about it responsibly and maturely, realize where we're messing up or what we can do to improve, and then just act on it. And I think we're very quick to act, but we've also made some mistakes along the way. I mean, I'll tell you, I went to the board one time and I told them I want to launch in Egypt. This was maybe 2 years ago. And they're like, why Egypt? And I'm like, there's over 100 million people. We want to launch there. It makes sense. Fractional real estate. People want to, hedge to their currency. And my whole board were like, no, Egypt. We don't believe in it right now. Now's not the right time economically. Don't do it. And, as a founder of the business, you guys need to listen to me. I feel it in my gut. They're like, listen, we trust you. And it's very important to have a really good board in a business. We're like, we support you. We don't agree with you, but you're the guy running the show. Let's do it. And Manat was, with me. We were both agreeing to it. And it turned out to be one of the biggest mistakes we did. We lost a lot of money. We lost a lot of time. I wasted people's time in the company because they were building the technology to launch in Egypt. We got an office, we hired a team. It was probably the biggest mistake we did. And at that time, I'll never forget, I was like depressed. I had a terrible time. It took me a while to get out of that hole because I felt responsible for making a decision that really put the company in a very difficult position. So, yeah.
You talk about the board. Obviously, investors in the business sometimes want seats on the board. Mm-hmm. How do you choose a board?
So anyone who's giving you a lot of money will ask for a board seat. And I think you're not going to take money from anyone that you're not aligned with, and effectively vice versa. They're not going to give you money if you're not aligned with you. So that kind of ticks the first box. Most importantly, when we're choosing someone from the board is our board members need to complement each other. So just like the three founders were very different, the board needs to be very different. So on our current board, we have someone who, VC, Walid Mansour, who comes from, full VC startup mindset. And then there's Manat and myself on the board. And then we have someone who's more old school profitability. His name's Amir, who comes from a real estate background, but he's very old school about, what's your bottom line? Don't talk to me about growth. Talk to me about profitability. Talk to me about how much money you're losing, how much money you're bringing in. Cash in, cash out. And then we're just going to announce our independent board member who was actually the CFO for one of the largest exits for our company in our region, who comes with that, how he took a business to scale and exit. So you really need to choose people who are aligned with you from a value perspective and ethically, but also who can bring different things to the table. Because the board, what's the board's job? because you're day in, day out into the business, you're so deep in, you don't see the things that are happening around you. They bring you that perspective. So it's super important to bring a board that can actually challenge you and really bring up the tough questions and tell you when you're doing something wrong. Your board needs to tell you, hey, you're spending too much money on this. You can't do that anymore. And we've built our board resolutions in a way where there's checks and balances for us as founders. And I think it's super important and super healthy.
Lots of people listening to this right now, maybe in startup phase, maybe wanting to start a business up. So maybe we can give people some tips and tricks and ideas around what you should and what you shouldn't do when you go in to start up a business for the very first time. So you did it with Manar, but maybe people don't have a partner. Okay. So if you're going to set a company up, what are the first steps that you need to follow? So I've got an idea. Okay, I want to be an entrepreneur. I'm fed up with this bloody 9 to 5. I'm working at the bank or whatever it may be. I've got this idea of this project. So I want to go out and I want to dominate and conquer the world because, yeah, it's brilliant, this idea. What are the first things I should be doing?
I would speak to everyone about it. People tend to say when I have a great idea, oh, I'm not going to tell anyone because they might copy me. No, it's about execution. So I would speak to every single person you know that will tell you either it's a good idea or it's a bad idea, and they're going to be honest with you. So I think that's one thing that you have to do. We spoke to everyone, whether they were friends, people in the network, people in the VC space, people in the real estate space, and we just went out and we want to do this. And a lot of people said, you guys are crazy, this won't work. But a lot of people said, this also might work and we see the potential. So first thing is definitely speak to everyone about it. Secondly is you said if they don't have a partner or a co-founder, whatever it is, find one. Some people say, oh, you can do it on your own. I think in this journey, it's very important to find a team that, whether it's a co-founder or a senior team that you can count on, because going at it alone is very tough. And I say that because there's many ups and downs, and you're going to need someone to pull you back up when you're down, and there needs to be that kind of back and forth. One of the things that I would say don't do, and we made a big mistake with this, and I'm being fully transparent, people might be hearing this who are with us in the early days, is don't hire. People think that startup is more of a relaxed environment, ping pong and pizza on Fridays. And, really the culture these days, people want to join startups because they think it's more relaxed. There's a better work-life balance. That's not the case, at least at Stake. We operate in a way where we're always on call. We're pushing at 100%. If there's something that needs to be done and it needs to be done at night, then it needs to be done. What we did wrong in the beginning is we hired people that were a bit more startup friendly, and they weren't our type of, we didn't align on our culture and ethics and, kind of how we want to take this business. And I remember I spoke to someone who was actually one of the first 10 employees at Deliveroo. He's the GM of the region. He's a good friend of mine. And I'm like, listen, Anis, I've hired people, but, there's something wrong with the culture. We're not moving fast enough. We're not working. He's like, who'd you hire? I know you're a workaholic. You work 7 days a week, 12-hour days. You're always working from all the time I've known you. So like, who did you hire? And I'm like, oh, we hired this guy. What do they think about when you message them at 9 p.m.? They say, oh, they don't reply till tomorrow in the morning. He's like, so that's your problem. You've employed people who you're trying to fit their culture. They're not trying to fit yours. And that really stuck with me, and it sticks with me till today. Even when I interview, I speak to everyone. I mean, literally anyone who comes into the company, even at 86 people, I try to interview every single person. Because it's very important that culture sticks within the entire, especially now that we're in 2 countries. So I would say don't ever hire someone just you're not fitting them. They need to fit you. Otherwise, it's going to be a very painful experience. And I think that's what slowed us down in the beginning, is we hired people that didn't have the same intentions. They wanted a more easier life. And then when we found people that understood what startup means, they understood that working, nonstop, and there's shares involved. Everyone in our company has shares. So it all means that there's value, that you're building value in this. And I think that was the biggest, make sure that you don't hire the wrong people. Another one I'll tell you is don't take money from someone just because you want to take money. I know, people will dangle checks at you. Don't take money from people that you're not aligned with. They will make your life hell. And we avoided that many, many times. People who came to us were like, yeah, we'll give you $1 million, but we want this. We want this on the board. We want this control. And honestly, had we done that when we were desperate in our darkest hour and taken that money, I think our company would have closed down by now. and we would have probably left a long time ago. Make sure that you're taking money from people that you're aligned with. Don't just jump at any money. That's very important, because people become shareholders and they have rights. So you're married to them. When you take money from someone, you're married to them. You owe it to them. So they can dictate what happens with your company. So be very, very careful, and never go cheap on legal. Get good lawyers. Always get good lawyers.
Why?
Because, the terms, our shareholder agreement's probably, 50, 60 pages. And when you look at it, there's a lot of stuff that can be hidden. If you don't get a good lawyer, people have had exits, and this is true. People have sold their companies, but because they didn't read the agreements properly, they ended up making a lot less money. Or they didn't, there's certain things I'll tell you that I've learned in this journey is some people want the decision making on who you sell to and at what value. So imagine you've worked your ass off day and night, and someone who's giving you money can decide at what value you want to sell at. And they can decide to exit the entire company at an early stage, even though you're not ready to do that. Some investors actually ask that. So that's why paying for legal is important, very important.
How important is it to know how to sell?
It's everything. Everything. It's literally everything. Because if you're not selling an investor, you're selling your team member. If you're not selling your team member, you're selling a client. If you're not selling a client, you're selling your co-founders. I have an idea. I need to sell it to Manado and Ricardo all the time. So it's so important. You need to have that, EQ. It's so important. Like literally, I can't even stress on it more. And I think had I not started in sales, and I've been, in sales all my life, I would not have been able to build Stake, without a doubt.
Wow.
It's so important. You need to know you're selling a dream. You're telling people, give me money. This is going to be $1 billion business. They have to believe in you.
Okay, I've got some questions from my team,
Mm-hmm.
okay, that have asked me to ask some questions for you. So hopefully you don't mind if I go through some of these.
Not at all.
What's a belief about real estate that you think most people have that's completely wrong?
Quick money. They think you put money in real estate and it's quick money. It's not. And they think if real estate will always go up. No, if you buy the wrong product, it won't always go up.
Good question. What was that moment in your career that made you think, I need to build something different?
When I was in my previous company, well, actually the two corporate companies. Well, I was at Damac first. I was at Damac, and then before that I was at First Group. I left First Group because I felt unfulfilled anymore and I just wanted a different challenge. And at Damac, when I was working long hours, but still not being given the appreciation that, I was putting in the hours and stuff. So I think that was when I was like, why am I doing it for others? Like, I can do it on my own. So when you just wake up hating your life, going to the office, that's the time when you're like, okay, I need to change.
Okay. Stake challenges traditional real estate investing. So what gave you the courage to disrupt such an established industry?
Because I've dealt with retail investors, thousands of retail investors for the last 20 years, and I knew that they weren't getting what they deserved. Traditional real estate today is still people are buying it every day in the billions, but there's a better way to do it. And because I saw how many people were burned buying the wrong product, whether it was off plan or ready or dealing with the wrong broker or the wrong developer, doing something in a better way in such a big market made so much sense to me.
Okay. Why is Dubai such an attractive market for real estate investors?
There isn't any other city that compares to it. If you look all around the world, it attracts capital from all the world because of how safe it is, how connected it is, how advanced it is. And then I would challenge that by saying the next city that's going in the same direction is Riyadh. Look at what's going on in Saudi Arabia. So it's anywhere you go in the world, people are talking about this region, specifically the United Arab Emirates and Saudi Arabia.
Got it. What advice would you give to someone investing in Dubai that doesn't know Dubai for the very first time?
Do your homework. Please do your homework. You're not buying a pair of shoes. You're putting a considerable amount of money into one of the biggest asset classes, one of probably the biggest purchase you'll ever make. Do your homework. Talk to as many people as you possibly can. Don't speak to one developer. Don't speak to one broker. Do your homework and speak to many people.
Makes sense. Okay, how do you see Stake evolving over the next 5 years? You've got 100 million valuation now. So do you work on value and valuations?
So I'll tell you, in 5 years, we will be the largest real estate investment platform in the region that will enable people to invest in real estate cross-border from one app. And what I mean by that is today, for the first time ever, you can invest in Saudi Arabia and Dubai from one app. In 5 years, you'll be able to continue to do that, but we'll be adding Abu Dhabi in a couple of months. But we'll also enable you to invest in the United States of America. We'll enable you to invest in Europe through one app. We want to be the go-to investment platform for real estate in the world.
Fascinating. Okay. How do you define success for yourself beyond finance? What does it mean? What does success really mean to you?
Success means to me seeing people that are around me who've believed in our goal, who believed in our dream, growing in their careers. Seeing people who joined us as one of the first employees and then seeing them grow now and manage a team. That for me is so fulfilling to see that people who've trusted us today are reaping the benefits by growing their teams and really seeing how the business is growing. That's one. Another one is when I haven't told you the story before, but speaking to someone who was a VC we were raising money from, and he's like, before we, get into fundraising and talk about your numbers and stuff, I'm going to tell you a story. I was with my family on holiday in the Mauritius. I land in the airport, we get in a cab with my family on the way to the hotel. Taxi driver starts speaking, where are you from? I said, I live in Dubai. What do you do? I invest in companies. I also invest in real estate. The taxi driver is like, actually, I've invested in real estate in Dubai before. It's like, what do you mean? He takes out his phone and shows him the Stake app. That for me was the moment where I'm like, okay, we have actually enabled a taxi driver in the Mauritius to own a piece of property in a foreign country through an app. And that for me is success. That for me means that we're on the right track. And now we're enabling people from all over the world to invest in Saudi Arabia, where before, non-resident investors, that's a closed market. But now in our first real estate fund, which is $50 million, we've enabled now over 100 nationalities to invest in the market. That's for me is fulfilling.
Interesting. There's those moments that you have, I've had them over the years, where I've got in the car, okay, and I've gone, yeah, I just sat in the car and there's little bit of moments, it's like I made it type moments, yeah, this has happened. And that feeling that you get, it's just like you think, I'm getting there.
Yeah.
It's real,
Yeah. But here's the thing. So I actually want to ask you about this, because that moment where you're like, yeah, how long does it last? How long does it last with you? That euphoria. And I'm interviewing you now because for me it's just so short, very short lived.
It is short, but what it has always done for me is when those moments I've been able to remind myself of them, and so I use them to give myself confidence, and I use them to give myself optimism, and so they're little springboards, and of course they last nanoseconds in the grand scheme of things. I mean, in sales, what happens if you're a top man at the end of the year, December 31st? Yes, January the 1st, 0,
100%.
But it's just it's that feeling. It's proving to yourself that you can be that person you wanted to be. I think that's what it is, for me. As I've got older, success means something much, much different. But those little wins, okay, it was like this validation.
Yep.
And then that validation and the people that would celebrate your success through gritted teeth and hating your guts, okay, as much as the ones that were there to celebrate it. In whatever way that was, whether that's in a restaurant of 10 people or whether that's in a ballroom of a hotel, it didn't matter.
Yeah.
It was that little bit of validation. This is that almost like I'm worthy. I have some value. I have some value. I'm not some uneducated piece of shit from Essex, You know what I mean?
No, I get it. 100%.
I get it. That's what I think.
Yeah.
Interesting way to ask that question. There's 3 or 4 more questions left. What are the non-negotiable habits or practices that have been instrumental in your success?
I love that you say that because, my co-founder and I were talking about this, and I was explaining to him what are my non-negotiables that have changed in 2025. Non-negotiable for me is 6 a.m. at the gym. I mean, we work out 100%. We work out together. That is a non-negotiable. I have to be at the gym 6 a.m. I don't care. A new non-negotiable for me is I need to be in bed by maximum 10:30. I don't care whatever's happening, I need to be in bed by 10:30, maximum 11.
Is that 10:30 and scrolling or 10:30 and lights off?
Lights off.
Okay.
Lights off, no scrolling. My phone is all, it's on silent. I need to be in bed by then, which is weird because before that, I used to be like, okay, anytime anything's happening in the business, message me, I'll answer 11, 2 a.m., whatever it is. I can't do that anymore. I need to get my sleep because I know that it's made me a better decision maker. It's made me a better person. I just wake up a lot more excited. Those are non-negotiables for me. And another non-negotiable for me is I need to make sure that by 7:30 p.m., I need to make sure that regardless of what's happening, I can go home and see my newborn, an 8-month-old, because I missed my first 2 kids. Growing up, I was always a corporate life. I didn't control my time. Now, 7:30, whoever needs me knows that from 7:30 to 8 p.m., I cannot be contacted. I need to see my daughter, and then 8 p.m. onwards, I'm back online. Those are important.
How do you personally handle failure?
Not well. Not well at all.
So you talked about that time when you had this idea around Egypt, but how do you, when you say you don't cope with it well, does it just make you want to be on your own? Or?
Yeah, I get into this like shell, and I just get quiet and I get depressed. It takes me a while to come out of it. I need to get better at that, and I think that's where it's important to have a good team around you and founders and co-founders, whatever. I don't deal with it well. And that's one of my weaknesses. I think it just consumes me so much that it really affects my decision making for that, how long it takes me to get out of it.
You hate letting people down.
I hate letting people down. Most importantly, I hate letting myself down. If I have big hopes and big dreams and whatever it is, or we had these targets that we wanted to hit and we couldn't achieve it, that thing just eats in my brain. So I need to get better at that.
What's one trend or piece of advice that you hear often in entrepreneurship that you completely disagree with?
Wow, that's a great question. One is definitely if you raise enough money, you'll be successful. I think, people are like, yeah, you raise a big round. Oh, this guy's definitely going to be successful. Not at all. Money is a means to really growing the business. But if your fundamentals are wrong, it doesn't matter how much money. People get excited in this industry. They raised a $50 million round, they raised a $100 million round. So what? For me, it's not about the money. There's a misconception about how much money you raise, meaning success. It means a lot of dilution as well, right? How much do you actually still own from the business? And I also, one of the things I would say is people think that entrepreneurship is all about glamour. He's the founder of this, or he's a CEO of this, and it's really not glamorous. You really go through a lot. It's fun, it's exciting, it's fulfilling, but don't do it for the wrong reasons. Don't go into a startup if you think it's about the glamour, because it's not. It's not glamorous at all. It's tough, it's challenging, it's consuming, it's draining.
It's shit and it's dark and it's lonely as fuck a lot of time, isn't it?
100%. And I think, people who get into it for the wrong reasons quickly learn that, oh my God, what the hell did I do? Because there are many days where, you're going to be tested. And again, you've put your life savings into it, you've put your time. If you can't raise money, your business closes. And then you're left with basically nothing.
All those years in corporate for nothing.
Exactly.
Yeah, all of those years for nothing.
So you have to be willing to take that risk, which is, by the way, when you ask me about failure, that eats on my mind every single day. And I think I can't lose, and I can't be in a situation where I go back to zero. I will not allow that to happen to Stake. I will work my ass off. I'll be there before anyone. I'll put in all the hours that I need to make sure this company is successful, because what's the downside? The downside is back to zero. We've put our whole life and time into this. So, and all our savings. So you can't go, you have kids, you have family. That's where that when I close my eyes and imagine what failure means, I'm like, no way I can let that happen. There's no way I can let that happen.
Last question.
Mm-hmm.
Talk to me about pride. Who do you think is the most proud of you?
Great question. Are you talking about pride or ego?
No, pride.
Pride.
Who is the most proud of you?
Proud in what way? I want to dig into that question. In what do you mean? Proud of what?
I'll give you an example.
Tell me.
I think the person that's most proud of me is my mum. Okay. She's really, she beams with pride when she talks about me. She's always telling people, "Oh, what do you mean you haven't watched the podcast? You should be watching the podcast." And my son was interviewing Rami Tabbara the other day, but don't you know how he is? He's built $100 million company. Because my mum listens to every podcast. But with my business success over the years and the stuff that I've done, she's really, really proud of me. And she reminds me of how proud she is. And that means the world to me. Because it's like someone really, really believes in you. So who do you think is the most proud of you?
I would say it's my son, who's 9 years old. Really. I can see it in his face every time he talks about steak. I've explained it to him. He gets it. He understands it's about real estate. And, when he comes into the office, I can see, how proud he is. I would definitely say my son, Faris, is the most proud of me, which is, saying something. He's young, but he just gets it. And he asks me, how much sales did you guys do today? What volume are you on? Where did someone invest from? You told me someone invested from Japan first time. He looks at the nationalities of people that invest. So yeah, I would say my son, Faris.
Wow. How beautiful is that?
Yeah.
You must be very proud of him.
Yeah. Oh, he's an unbelievable guy. Definitely.
Rami, thank you so much for coming to join us.
Thanks for having us.
What a great
Really appreciate it. Thank you so much.